A UK recession is now fairly imminent. House prices are starting to ease off a little bit, and we're starting to see signs indicating that there's much more turbulence to come. However, as property investors, what is it that we need to be looking out for? If you're watching my videos for the first time, my name is Saj Hussain, and on this channel I share with you my 15 plus years of property investing experience to ultimately help you get further faster in your own property investing business. At the time of recording, the race for the new Prime Minister has narrowed down to two individuals, Rishi Sunak and Liz Truss, both two very different individuals. Now it's ultimately going to be down to about 150,000 people, the members of the Conservative Party, who are going to choose a new Prime Minister for us. However, this new Prime Minister could majorly impact what happens in the property market going forward. And over the next few weeks, we should really get to understand what their views and policies are in this area. However, this political turmoil is not what's going to be causing uncertainty in the property market. There are just so many other things going on right now. Inflation is creeping up to a 40-year high at almost 10%, with the expectation it's going to be hitting 14% soon. Fuel prices are also sky high right now, with another hike expected in a few months' time. Stock markets have been on a downward trend since January, and crypto markets have crashed out. Although interest rates are still at a record low, they are now starting to creep up, and the risk is they could start increasing very quickly. The Bank of England have also warned us that its outlook has now deteriorated. Ultimately, all this means most people in the country are going to start feeling some financial pain. They're going to have less and less money in their pocket to spend. That pound, each and every one, is going to go less and less further than it has done previously. They're spending more filling up the car, they're spending more at groceries, the utility bills are much higher, the mortgage rate's higher, the rents have gone up. All of these things at the same time are putting massive financial pressure on individuals, but we haven't yet really started to feel that pain. And it's going to get a whole lot worse before there's any signs of it getting better. I expect in the coming weeks we'll officially be in a recession. And when we say officially in a recession, essentially what they mean is the economy is starting to shrink 2 quarters in a row. Now we're all hearing this terrible news around us, but how is it affecting us property investors? Well, the market really is starting to ease off. I keep a close eye on the market and an ear to the ground in terms of what's happening, what's going on. Personally, I think some house prices will start to fall in the coming months with the market starting to ease off. I don't think it's going to crash. I don't think it's going to fall off a cliff. But there's so many things that are on a tentative edge that actually, if they change, could have a significant impact in the property market. This has been a concern I've had for a little while. So what we've been doing is getting a number of projects finished and properties sold that we want to clear off our books. We've completed a number of transactions and we've been pushing hard to get those sales done because we don't want them dragging on for months and months. Let's say we agree a sale now and in 3 months it gets close to completion, the seller changes their mind because they get a little bit nervous, only back to square one with a new buyer, then I've got to start again with another buyer. And let's say that takes another 2-3 months. We could be 6 months from now before those properties are sold. So I've been working really hard to get those deals done. Many of them are completed and transactions are now wrapped up. You may have seen a video that I did recently where I interviewed Paul Bassi. The man has built up a significant business and property empire, about £300 million worth, and also a REIT, a real estate investment trust, which is effectively a property investment business that's listed on the London Stock Exchange. And one of the things Paul was talking about is selling off big chunks of their portfolio as well right now, because when prices are crazy, people are paying and overpaying and desperately trying to fight each other to buy property, then it's time to sell. You should be selling property, let them buy, cash in, put that cash in the bank and wait for the opportunities. I guess I'm in a fortunate position where I get to spend time with some very, very experienced property people who've been doing this many, many more years than I have, and been able to benefit from their experience of where they see the market going. And many of them talk about the downturn that's potentially coming in the marketplace and how we should be preparing ourselves to benefit from this downturn that will occur. Right now, there's just so much cash out there and money has never been so cheap. The interest rates are exceptionally low at the moment, and what that means is it's very easy to buy property. But as the market starts to turn, which it will, what you'll find is that lending won't become so easy. There won't be so much money around. People become more fearful because they don't really know what's happening. They're uncertain where the market's going. But that's where the best opportunities are presented. When I first started in property, we were just approaching a full-on recession. There were just so many opportunities to be had. Even though I was still quite early in my property investing journey and my career, just trying to learn about property, there was just so many opportunities, and I think that really helped accelerate my business. And that time is coming around again. The question is, will you be ready? And yes, we've been actively selling property, but we're still actively buying as well. So it doesn't mean that we sit on our hands right now, do nothing. We have to be observant of what's going on in the marketplace and find the best opportunities. So for example, our HMO properties that we acquire, service accommodation property, these are high cash flow strategies. They're going to be generating cash. People still need this type of accommodation. And these are not properties that we acquire with the view to try and sell in 6 months or a year's time. These are properties we buy and hold for the long term for cash flow. And yes, even if the market takes a turn, they're going to continue to produce income. We're not going to sell those property. It means we're not going to crystallize a loss, even if the market falls in value. And then on the other hand, if you're developing property right now with a view to sell in 6 months, a year's time, in 18 months time, then you have to be very careful. We don't know where the market's going to be at that moment in time. What if the market falls slightly? What if material prices and labor prices continue to rise? The margin in between is going to shrink and shrink. We've got to be very careful with those type of investments. And yes, we do well in what we do, but I am also ultra cautious in how we invest. And the main reason for that is because I often work with other people's money. So I'm very careful with the type of property projects I'll get involved with. And if you're interested in learning more about investing with me, then reach out to us. I've got some newer investing models that we're putting together right now. That means you can get started with smaller amounts of money and benefit from our experience and our contacts of being in this business. Look, at the end of the day, none of us have a crystal ball. Nobody knows for sure what's going to happen in the market. Yes, there's a lot of indicators and clues, and they're our early signs of where the market could be going. And that's when we should be making our decisions of what we're going to be doing, what type of property we're going to be buying, what type of property we need to stop buying, and how we need to adjust our model. And there's a great saying in investing: when others are fearful, be greedy, and when others are greedy, be fearful. And one of the things that I learned very early on in my property investing business is that the only certainty in property is constant change. The market is constantly changing and evolving, and we need to be ready. As I start seeing that change happening in the marketplace, I'll be sharing this with you. And if you enjoyed this content, make sure you click on my face over here to subscribe to the channel. And if you want to learn more about the property cycle, and particularly about the 18-year property cycle and how that works, then make sure you watch this video over here, which I'll see you next on.